Hey everybody, it's Carmasino here at Chaikin Analyst. This is the halftime show here on StockCharts TV. Each and every week we kind of go over some names that are changing trend, just kind of overview of the markets, what's going on, and kind of what to look for and maybe what to expect. But we're going to review some sectors today. We're going to look at some names that had some bullish changes in the last week or so, just kind of like we did last week, but from a different point of view this week, certainly using the Chaikin rating, which is available to you on the ACB platform. But also, we've got some secret lists that we keep here on the Chaikin platform. I'm going to share some of them today. Let's just talk about what's going on in the market here. We had a pretty ugly looking beginning of the day here in the morning. It kind of rallied all the way back. We were positive at some point, and now we're negative again on the Dow, about 0.3%. The S&P is a little bit more, about 0.75%. But the NASDAQ is really taking it on the chin today, down 1.3%. It was down as much as 1.9%. But, we're off our lows and a lot of activity going on. This week is pretty busy, right? We've got tomorrow, we got Case-Shiller, Chicago PMI, consumer confidence, which is a big one. That's at 10 o'clock tomorrow. That's going to probably shape some of the rest of the week's trading and just sort of the sentiment going forward for obviously what's happened in the past. This is January, so this is looking, in weeks prior and months prior. And that holiday area is obviously of interest to a lot of folks. We've got ADP employment. That's the first. All right. So that's Wednesday. But we also have ISM manufacturing and S&P manufacturing PMI. Both of these are coming out around the similar times. Weirdly, the S&P comes out at 9:45 and the ISM comes out at 10. So sometimes they help kind of guide what the other one's going to do. And it's interesting, but you got crude oil, inventories, and of course, we've got the FOMC press conference because we got a Fed meeting this week and we're most likely going to see an interest rate decision. That's February 1st around 2 o'clock. So all eyes will be on that. And then obviously followed by that is initial jobless claims on Thursday. That's February 2nd and February 3rd. Guess what? Non-farm payroll. So we've got a jam-packed week, a lot going on. Volatility will certainly be the featured special on the menu. And that's why we want to look at some names that are kind of making changes here in the market, seeing what's happening from sort of the riptide, right? Looking underneath the surface. We can look at the indexes all day, but let's see if we can find some names that we can potentially take positions in, or at least that kind of look good. We add to a watch list. You know what I mean? These aren't recommendations. These are names that are kind of changing and maybe following the trend that's underlying the surface. So let's take a look at that right now. All right, we're back here on the ACP platform. First look at sort of the weekly chart that if you've been following me for any more than a few months or even a few weeks, you know that I kind of look at this as many times as I possibly can on a weekly basis and sort of update it even live, which I'm going to do right now, looking at sort of this trend getting above. Now, this is the bullish percent, okay, for the NYSE. The middle one is the NASDAQ, okay? And I try to just touch as many points as I can on this trend line to make it seem, very identifiable of the trend. Obviously, you can see in the last 5 weeks on all of these, even 6 weeks on the New York Composite up top here, we've seen bullish percent increasing. Now, the S&P has been a little choppier, but it is above this trend line, which is, rudimentary at best here. But, as many lines and tips and tops that you can touch together is kind of my rule of thumb. It may not be the perfect rule of thumb, but that's kind of, where we're at on that. Rally number 5 is really officially in. It's up over 6%. 5% really constitutes a rally for me when I look at it on a weekly basis, and that is rally 5. So we are in our 5th rally, identifiable on a weekly basis, looking at least 5% off of a recent low to the upside. Now, what's it doing? It's hitting right into the resistance level, more psychological than technical, of that 4,000 area, kind of hovering around there. Tries to get as high as got close to 4,100, shied away, rolled over. We saw a lot of activity. The volatility is going to be the name of the game this week because we just have so much news and so many talking heads coming out talking about a million different things, right? So I'm going to cut the camera here from my point of view, give me one sec. This way you have a full screen. You can see the rest of this going on here. So that's kind of what I like to look at, right? We look at the S&P, in general, we can see it's obviously been putting in lower lows and lower highs, but this last rally is a little bit different because you got to squint to see that higher high, but it's there, right? It's definitely there. And a higher low here is there as well. That's pretty evident. And so that is sometimes, not all the time, sometimes the beginning of a new trend. So we'll take a look at that and keep it on our radar. I'm pulling up this particular one, emerging markets, which obviously has been, doing pretty well. If you look at the correlation to the 120-day correlation to the U.S. dollar, there's obviously some triggering there that's happening, right? And so you look at the EEM, emerging markets are around 33 or so when the dollar started to top out, rolled over, broke that trend line, and what broke out? This did. Well, that's because you've got currencies obviously driving speculation in markets, no matter what it is. It could be housing market, it could be stock markets, emerging markets, bond, fixed income, however you want to label it. Rates are driving a lot of different things. And so when you see the dollar fall, right, obviously rates are coming in because that's the way they're correlated. When you look at the correlation to the dollar to the EEM, you see it's obviously has a negative correlation. So when the dollar retreats, EEM rallies. And when the dollar rallies, you can see this area here, the EEM falls. So pretty rudimentary again, but overall, this is actually setting up on a bullish trend change. No doubt when you got the moving averages crossing. It's not a perfect indicator. It's just one out of a million that you can look at. That's why you look at the correlation to the dollar to kind of either keep you in this trade or tell you when it might be changing. And so I would watch that if you're interested in anything on the international side. So XLB was the material sector, which we talked about many, many times, and kind of coming off of an odd year. It gets this triple top area on the ratio and kind of sits around and retreats. The last retreat was pretty rapid and I would even say violent to a degree. But if you look at the sector ETF, it went from 80 all the way down to about 65, 67, 66, something like that. That's enough to, to experience some pain, but the rally back to 83 is kind of stalling, and you're seeing the ratio stall at the same time. So I would just look out for that. Let's look at energy. It's been always, one of the top sectors to talk about in this last 12 to 18 months. Just really steadily moving higher and has its periods of pullbacks, which have been opportunities, but at some point that changes. And just as I'm seeing on the S&P, I'm seeing the energy put in a lower high now 3 times on the ratio. If I go to look at the actual sector, I've got about a double top here forming around that $94, $95 level. And so, if it can manage to break through, you might see a bit of a rally, at least to 100 or higher, only because there's really no resistance that's of recent memory until you get to that round number anyway. So I'd watch that one as well. Let's look at XLK. We like to look at the tech sector. Obviously, everybody does. It is getting close to a bit of a moving average crossover here on the actual sector fund itself. But, look, it did manage to break out of this sort of that double top area, but we are putting in higher lows. And now we actually have a higher high here. So interesting setup here, but the ratio is still not bullishly set up, except for the fact that it is consolidating down here, as is the sector fund. So again, one to look at and kind of be aware of. And let's look at utilities real quick, and then we'll go over and look at some names that we talked about on those secret lists here on Chaikin. So utilities, right? I mean, look, it's defensive in nature. Here's the beginning of 2022. We just saw this move back and forth, basically with the risk on, risk off trades that were occurring periodically during the course of 2022. Now we're getting into an area where we've been risk off, and utilities might have given us a signal earlier than even the markets were able to in general, when I say the markets, I mean the indexes, but that's why you want to look at the underlying components sometimes. And the ones that are like utilities that are bond proxies, that's your risk off mentality. And so look at the top here on the ratio, which happened somewhere around, late September. And then obviously here's a lower high that happened late December. So 3 months of downward pressure, consolidation, and obviously now we're turning negative here on this utility area. So defensives are being avoided and sold, and obviously something to more aggressive side, as we saw on technology and even communications, are starting to gain a little bit more traction. But I'd still call it early, and I definitely, as many investors and even short-term traders, you don't want to fall for every head fake here, but you don't want to miss the opportunity either. So it's always that balance of being involved, not over trading or heavily betting one way or another, so you don't miss the overall trend. And if it does change, just be nimble. That's all you got to do. Let's look at some names right now. Okay, folks, we are back here on the Chaikin system now, and as I promised, we do have some interesting lists here. Now, this is kind of broken up there by that line, but it says strongest stocks in the Russell 3000, which is basically the IWV, with strong cash flow and very bullish price to sales. And these are the quick names that you're looking at. Building products and construction materials has been, on a trend change. You can see right here where we saw this move on the relative strength to go from sort of undirectional to positive pretty quickly as it moved above its trend. And obviously our rating was kind of battling back and forth just because it was living above and below that trend line. Because when it goes above the trend line, that's when our rating will adjust to bullish. But it has to be a good fundamental stock for it to be a bullish stock in general. And look at financial and earnings. It's pressed all the way to the very bullish side. Evercore, another name here, capital markets, has been doing really well on the strength change here, on the relative strength change, which was back basically before earnings, which is always a risky time to be trying to either start to invest or game a name or even do a short-term trade. If you're a longer-term trader, this was an interesting setup because you've got money flow, relative strength, and our rating was ahead of that change. And as I said, it doesn't get any more bullish than that rating right there for us. Another one is Hilltop Holdings. This is a small cap bank stock, okay? But similar setup, as you can see. And then let's look at these last two real quick. PBF, which is an oil and gas name. Again, more of a larger small cap or even a small mid cap, you can call that. But kind of failing here, got above the long-term trend line, but it recently had a ratings change. And the relative strength has really been pretty steady. It's had its areas of negativity, but you got to overlook that and kind of be able to trade the overall trend sometimes. But even if you had some stops around that trend line, you were able to protect yourself and maybe get re-engage with the name at a different price. As long as you had the ability to lock in some profits, that would have been great. And the other one is a biotech name. I'm not a big fan of biotech, but it's on the list. I figured I'd show it to you. It's a strong stock in a strong industry. It's got some interesting fundamentals. And again, setting up on a recent relative strength change and obviously getting a bullish rating from the Chaikin Power Gauge rating, as you can see down the bottom here. That's been bullish since October or so. And the last list to look at is Analyst Darlings, and you can see our definition of that. It's the strongest stocks in the Russell 3000 with recent increase in bullish analyst activity. So there's your list. Take a snapshot of that. It's a video. You can hit pause, take a look at some of the names. A couple made it over from the other list, PBF, VIR, and Evercore. And one name, obviously, in the metals and mining area, which has been a pretty hot sector, Cleveland Cliffs, all experiencing kind of the similar setup here, but also getting some love from the analyst community too. All right, folks, that's all we have for today. I want to thank you for joining. Again, I'm Pete Carmasino at Chaikin Analytics. We'll see you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.